Hello everyone, Sam is here from myforexmagicweb.com, making this a small video um, about a couple of questions. One of my subscriber, my colleague, my friend Sai had a couple of questions, so I thought maybe it's a good idea to make a video so that everybody else can benefit out of it, and that the questions requires a little explanation. So I'm making this video. I already made another video earlier and posted on the video. On the YouTube about the yen index and yen pairs and how to do it. So I did not send to you guys, the subscribers. But if you want to watch that video, it's on my YouTube channel. It's just for the public. Okay. So how important it is to watch I think the charts are open here, so I'm going to just quickly show at the end. So first question was that how do we know that there is a reversal or not a reversal, and how far the move is going, the target, in other words. And let's say if the price is moving, so how do we know that it is just a retracement and not a reversal or a new trend starts, right? So that's the main reason that we have, or we learned two different studies, which basically they are the same: harmonic patterns and Elliott wave. The real thing is Elliott wave. Harmonic patterns are derived from that Elliott wave theory. Okay, Elliott waves, for example, of this 1 and 2, and if you notice that it is making like a bad pattern here, right? X, A, B, C, D. So basically, X, between wave 1 and wave 2, a lot of people have hard time understanding it. So someone says, okay, call it a bad pattern and then open a trade here. Simple as that. So harmonic patterns, nothing but Elliott wave in other form, in other perspective. That's all. But they are important. That's how you know that what the Elliott waves. And usually, like, see, coming down, if you notice here, I'm showing this because it's a recent chart and we are trading this. We are literally trading this right now, right? I gave you this chart, and then I had a few trade based on this chart. Let me show you when and how. Let me see if I can. This is live chart, right? So EJ, where is EJ? Light Forex, AJ, GJ. Oh, right here. Okay. See, this was the chart I made in 18th February, right? And according to the calculation of Elliott wave, this was like 1, 2, 3, and now we need to come down for wave 4. Wave 3 usually is 1.618 of wave 1, and the measuring way is this tool, that how far the wave 1 supposed to go. Let's see, from here we take it, and we want to see that how far it is. Is it 1.618, more, less? What's the story? All right, so if we take it from here, notice that it is this 141.4% area, and if you take this from here, this 1.618 and 178 is right here. So price hit that. It is like confirmation that this is the end of it, end of wave 3, and then you really wait for a reversal. Other factors involved, like if you draw the fib from here and see what's happening here. All right, let's see that. So you notice that there's another level, important level here, that with the retracement. And if you take it from here, different, I'm showing you that, how I do it. You see, you do it from here and then we hit 88%, right? So first was 38%. It didn't touch 50%, right? So, or you can say 50%, and then 50% drop to 23%, then goes to 88%. What is that? It's a bad pattern, right? Simple as that. It's a bad pattern, exactly, but not a perfect bad pattern, because we never touched this 50%. Let me take this one out. So you see, the 50% is just above it. If you take it from here, then it's 50%, right? And then see this 23% line. So I always teach you that. I will adjust this high for 20%. I'm not using any one of this point. I'm using air. But see this now, if it touches 50%, it comes back to 23% line. One candle poke into it, the second one above closes above, and then from there it goes where? It's supposed to go to 88%. Didn't it go to 88%? Yeah, right there. Right? So that's a bad pattern finishing X, A, B, C, D. And then from there we drop. So in Elliott wave count, 1, 2, 3, we need a wave 4 to the downside. This is how, this is very important, Sai. This is how you notice that, okay, the wave 3 is finished. We need to come down for wave 4. But from where? How? When? When do we make the entry? That's where my Magic IB system comes in. Because it's very, very important. You know, it doesn't matter if you are perfect Elliott wave strategist or harmonic pattern or whatever, but if you don't know how to and when to make the entry, perfect entry. Perfect entry means that doesn't take you negative all the time. But as soon as people, enter and then boom, it goes negative 30 pip, 40 pip, 50 pip, and then you have a high blood pressure and all that. Nobody wants that, right? So the reason that I made this IB system is to have an exact perfect entry. So now this is a week. Let's say this week started when? February 4. Let's go on a 40-minute chart and see when the February 4 is. This is February 1st, 2nd, and right here is starting the 5th. So that's where the 4th. The 4th gave you a reversal candle on a 40-minute chart. So if you're looking at that thing, which we were looking at it, just forgot about it. That's what it is. And I keep telling you, if you don't put these charts on the wall in front of you so that you can look at them constantly, then you will forget about it. What was the pattern that we are following, and then where we're supposed to go, in which pair. So here, this is exactly where this thing starts. From here. Okay. Bad pattern finish right here, and then you see that we gonna reverse or not. Yeah, okay, no problem. Here, all of a sudden you notice that what is this 137.05? Where we got that number? 137.05. Do we have any number here on a weekly chart? No, maybe on a monthly chart. 137.05. Even I don't know where that we got that number. Maybe one of these lows here, which I don't have marked. This is 136.22 and 139, and this high is 138.48. One of these numbers, it's 137.05. This high is 137.89. Man, where is that? 137.05. I can't find it. Let me see if I can. This is weekly. No, this is the same thing. 36.95. The close, very close, right? 37.44. This is the highest, 37.44. So when the price is around there, you write down these numbers on, or draw those horizontal line on a 40-minute chart, like this high, which I didn't mark, but it is 137.44. How far we went? 37.48. We touch that number, and then we start dropping. You got a reversal candle, and the next candle first started. The next candle I'm gonna see February 5th, the day open. Okay, so February 5th on a 20-minute chart is where? Whoops, this is February 5th daily open. Okay, this is the day open right there. Okay, so this is, you see, February 5th, the next candle. So after reversal candle, this was a reversal candle. And right after that, what do you have here? On 1700 hour on February 5th. Then here, then here. So you understand? If you know the pattern, the thing that I gave you, the charts, pay attention to that and then watch the 40-minute the numbers and then 20-minute for the entry. And you will have it. Now, for example, this is the old one that, pattern started very old, right? But how about if I go GJ and I gave you this chart, right, on the 23rd, that this rising TL and 48, right? You have, I just explained you the harmonic patterns, Elliott wave, this, that. But beside that, just SNR level, that's another three method that you have. Three method to find the direction, three studies, nothing else, no more three than three. Elliott wave, SNR level, harmonic patterns. That's it. The two reliable are the Elliott wave and SNR level. Harmonic patterns, if you have it, like it's an extra, right? Confirmation kind of thing. So this was the area 48.19, and the whole thing you can see that it's a big, impulse wave, and this is a correction. And also, I'm giving you and I'm making the monthly chart. You see this how monthly chart is? So obviously, if we drop at least, you're supposed to drop all the way to the TL. That's the logical explanation that this is what's happening. This is one TL, this is one TL. If we are not going to the upside, we're gonna drop first here at 140. Maybe from 140 we bounce and then go back to the upper TL. If not, then come down to the next level and 33.46, and after that maybe the TL or 29.32, something like that. One level after the other. That's the target. That's what we know that where we're going. Sai, I hope you understand that. I said if we break 48.19, we're gonna drop to 140, but not gonna happen in 1 or 2 days. 800 pip, right? It's gonna take few days, some time. So what really happened? I took it 26 Feb short based on this chart. Then this one, this entry, and they're both going, and this is what I end up with. From here is 150 pip. From here was like 135 pip. Total, you add them up. How much? And then the same day, another entry. These was my first two entries. This is another entry here after the retracement and coming down. Why? I'm keep shorting it because our chart shows what? We need to go down here, but there is a trend line in between, right? Trend line, and along the trend line you have this number coming in 44.75. So obviously that would be the target, the first one. If we break below 48, there is nothing else to hold. There is nothing else at all. No monthly number, and then there is no weekly number until 44.75. So whenever you see the opportunity of the short setup, you take it and let it go. After that, it's gonna probably bounce. Maybe hit the TL and then bounce. Look what happened. Not here. Gotta go back there. Trade. Hit the TL. Exactly. That's where we came. Right? So until then, all you had to do is keep shorting. Now, that's that, maybe we're going to bounce a little bit and then go back and test one of these levels, maybe 46.94. So just pay attention to those. For example, here, see 47. Draw the numbers. 46. We dropped more than that. We went to almost like 44 something, right? Or 45. So maybe we'll come back and then let me go the live chart of this is Euro Yen. And the same thing, you understand this at least. Now, let me show you another thing, another chart that I gave you. But you understand in pound yen that how I told you and what was the target. And the different calculation is one thing, but from there to dropping exactly at the TL, you just do short, 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 couple of days. And now we will see if we're going to make a turn, if we bounce from there or not. Now, second chart that I gave you was this. I had that open too, man. Okay, not the, all right. All right, this is the chart I gave you, right? On the 19th, right? I didn't do any trade on this pair, but has 3 or 4 beautiful, beautiful entries going to the downside. But look, logically, I said, if Aussie dollar gets strong instead of yen, then we will go above this number. This is like a borderline. And then from there, we're going to start going to the upside. And then the first would be this high. If you drop, then first will be this low. These are the two boundaries there, right? So if you drop, I've said first here until here. And then if you break below that, then we come down to 76.19. What happened to this chart? Exactly where I said that first time we drop, instead of Aussie, yen start getting strong, it start dropping, and then we came down here, right? Let's see, lately I'm having trouble, but I think I got it. Okay, no problem. Oh, now look, the entries. This is where my chart started, the one I gave you. Entry, 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 all the way down here, and this entry and this entry. And then if the strength in yen continue, then we will be going down continually, and that will be the low of the last. Let me show you right here. This one. Okay, there are different numbers in between also, right? So when the volume time comes in a day, when the day starts and the volume time comes, we watch where the price is going. That's the easy way. Instead, besides the Elliott wave and harmonic pattern and all that, because I cannot, explain all the whole thing here. But the easiest thing is that just pay attention when the volume comes and where the news are and which currency has having the news, and then especially those pairs. You watch that, after the news, where they are going, and then find your entry. You will definitely, certainly find the entries in the direction. Then you see the daily range, what the daily range are. If this pair has a 150 daily range, and then by the time you get the setup, it already has traveled 50 pip, then you can go easily 100 pip more. So right around 70, 80, 85, 90 pip, close your trade, because you know that you're reaching the daily range and it can return from there. Okay, look for this another level in that area. Like this one, we were dropping, and then what do you look for? 41, 81, 41. 81, 41 is where? This is 81.57. I don't know why I have 81.57 here. What level is that? Oh, this one. 81.58. And look how clean it came, and it hit and bounced. And bounced to where? 82.04. Do we have a number? 82.04? 82.81? Haha. 82.04. So it's between, it's a ping pong, clear cut ping pong in between these numbers. Nothing else, bro. Nothing else. The entry is coming right there. See this one? This was an entry from where? 83.95. Do we have that? 83.95, 80 to 81. I see. 80. Oh, 83.94. Right? So this is 83.94, and your first entry here, it is 83.94. Okay, so you could have taken this one, this one, and this one easily, and don't take the one out of your trading time, volume time. If it is in the volume time, it's fine. So this is where the day started. It's not our volume time. This is our volume time. 10 o'clock, London Open. All right. So Frankie London Open, you could have taken this one easily from, that this is the level. This level is right there, and we're supposed to drop. Then why not? Right? And then the second entry comes where? This is it went up there and there, and this is the number here. Let's see, 8280. Okay, let's find that. 8280. I think I just saw it. Oh, here we go. 8205, 8281, right? So 8281 right here, and then you watch the first. Maybe I will make an entry right here, right? You make an entry and it takes you up. It goes up, make an entry, and then so you lose here what, 25 pip, 20 pip, 25 pip, let's say. And from there you make an entry here. I didn't trade, but I'm showing you, just telling you. This is the entry. It would be 8290, and then the target is 8158, and that's 8290. More than 100 pip, right? A lot more than 100 pip. 50, 58, 60, 70, 80, 90, 130 pip. So you lost 25 pip here, you make 100 pip down there. That's why it's very important. And then again, you could easily, before this level, you can close the trade and then wait and get another entry, then go down again. So many things to do. But pay attention to these numbers, draw these numbers. You're gonna drop if the day open, see daily open line, you open the daily open, the day is open below the wave, and then you go below the daily open line, you're gonna drop. Similarly here, this is the white line, this is the daily open line. Okay, this is the day of March 1st. Opens up here, came down, it went up, bearish. You can see clearly we are bearish, right? And then my weekly chart says that we're gonna drop. So you're gonna go long? No, you go short. Simple as that. And then you take the entry first. Sometimes it comes like double entries, and then you lose maybe 20-25 pip, but usually it's like one entry here, the other one is coming here, one single entry, and then it goes all the way. So this is the easy way. And then obviously if you learn the harmonic, not harmonic, I would say Elliott wave, that helps a lot. That to me, basically I find these targets. And you see that this is harmonic pattern, I have it here, right? But also, if you notice that this is wave 1, 2, and we're going for wave 3. Now, let me show you. Wave 1, 2, and it is 78%, I hope. 78%, exactly. Let me make it bigger a little bit. Here we go. Okay. So, Fib 2, Fib. You see the touch of 78%. That we have 1, 2, and usually it goes to 1.618. So 1.618, you draw the fib here, fib extension. We need 1.618. Where is 1.618? It's going to be right here. Okay. Around this area. 127, it touches 127. I always tell you 3 levels. Extended level, 3 levels. Means expansion, targets. 100%, 127, and 1.618. So we kiss that 127% and bounce. You can easily make the target to 127%. So many things pointing towards your targets, your SNL levels. You see, this is also the low here. So if you take this low, you're good. If you take 127%, you're good. If you even take 100% and then close your trade here, you're good. But I made the chart right from here, telling you that first we're gonna go there and then break that, and we're gonna come down here. So at least we're gonna come down. We're probably gonna bounce or whatever, and then come down. So easily 1.618, or maybe go a little down, further to the downside, depending on which SNR level into that area we find. Let me just move this thing from here and see. Around this area, this would be, okay. So 79.50, something like that. So do we have anything? 79.50, 79.20, right? 79.20 is this, and you have a couple of lows here, which is 79.59. That's what we're looking for. 1.618 is going to be coming down here. But the harmonic pattern, it may go down further. If you look from here to here, we have a touch of 61%. Then it usually goes for this is going to be like a crab pattern, 61 for B, C, and then go all the way down to 1.618. But it's, likely or unlikely, but, step by step, one by one, target by target, step by step, like 1.618, this is the next. Or simply, this is gone. We are going back up to testing this. If we hold, we're going to drop, look for short entry. Now come down to 79.20. We break that, come down to 77.57, big number. Then this one, then monthly low, stuff like that. Okay, so these are the and then for help, we look for like indexes, then what's happening to the index. Index chart just says yen index, that yen index is dropping and it's a long way to go. So it's a long way to go and dropping, and yen is going to keep getting strong and strong. Then we have a long drop here coming in. So every time it goes up, then you understand that it is not the trend changing because yen index is dropping and we have a long way to go. Then this pair will have also a long way to go. And these are the targets. So, all is in speculation. Harmonic patterns and this and that and Elliott wave. And then you have different calculations and you go these highs and lows one by one. Like I said, I was expecting to drop to this low and we came. And we're testing this now. And then if this hold, we drop. Again, we're going to take out this one and we go for 79.20, then 77.57. I should mark this one too. It's an important number. 76.77. This is 77.57. Right? And this big number is monthly low, which is coming exactly around 1.618. That's why I said the target could be this one, because you're making a crab pattern, and this could be like wave 1, 2. That we may make like wave 3, right? 1.618 somewhere here, then go for wave 4, and then wave 5. So the whole 5-wave phenomena will bring us down here for a crab pattern. Understand? Not wave 3, not necessarily. Let me go back a little bit. And then, you see this? No, I'm going to use this, right? And you see 1.618. Where is 1.618, right? 1.618 is this number, this area, right? Okay, I'm going to draw a line here. 1.618 right here, right? Okay. This is 1.618. Now, after this, we need 38% for wave 4, right? So remove that. Of wave 3, 38% of wave 3. Wave 3 will end here. We need 38% for wave 4. Okay, so let's measure that. Whoops, what did I do? Okay. I'll take it from there. Oh, no, right here. So here we finished 38 wave 3. Then we need 38% for wave 4, which is right here. This low here, right? So I'm going to mark. So 38% wave 4 is finished here. Now wave 5 is usually 0.618% of wave 3. Wave 3? Yeah, wave 3. Okay. So let's measure that and see where it comes. 0.618%, right? So we're going to draw this from wave 3 beginning, wave 3 ending, and wave 4 ending. Where is 1.6? Right here. What is the number here? 77.49. Okay, so it's not necessarily that we stop here. It could be easily 78% here. Okay, is that the next number, 78%? Yeah, right. So 0.618 is ideal, but 0.786 is also perfect, fine. So this is the, this is the way. It's like wave 1, 2. We're gonna finish wave 3 here. Then we're gonna bounce for wave 4 probably. ABC fashion or something, then wave 5 all the way down here, 78%. Then what we'll have is a bad pattern, 78.19. XAB at 61%, then C point, 23% line, and 1.618 right here. A bad pattern. Let me just show you if you forgot. I hope I'm making any sense, man. I'm probably going too fast. Like I said, your question, require that. See the crab pattern? Okay, this XAB is at 61%, then C, and then D comes all the way down to 161.8%. Right? This is what I said here. This is what it is. 161%. X, A, B, C, 23% line, B is at 61% line, then D would be here. If you consider this wave 1 and 2, if this is the way it is now, I can say that it is wave 3, and we're going to continue drop right here. Then we will bounce for wave 4. Small wave, it could be 38%, it could be, but ideal is 38% right here. Okay, ideal. And actually, you can see that if we come here, this is 23% line of this fib, and then we are going back to the 78% of the same fib, and then we're going to drop to 1.6 of the same fib. What a coincidence, right? I didn't see it. I draw the other, different fibs when I was putting these yellow marks, but they came exactly on these fib levels of the same fib that we have from here to here. So they're all connected, man. You just have to find out what the connection is, where the connection is. Okay. I hope I have I made any sense and clarify something. But again, like I said, first easiest is the SNR level. These numbers, one number breaks, good for the next number, and between those two numbers on a weekly chart, you easily have like 150, 200 pip difference. So you're not gonna reverse from there. Usually, something like that. If, for example, you're dropping here, you drop here, and then you go A, B, C. You have 1, 2. Now you need at least AB equal to CD, something like this long length, and you got it here. Then it repeat again. You got one more dip here. Then repeat again, one more dip here, something like that. Here we had the same thing. We went up, we dip, we went up, we dip. Now we're doing the opposite way. Okay, so until like a retracement is 1 and 2 exactly at 78%, and then you start dropping, then you know that the first target would be this low, then the second would be this low, and then measure 1.618. You're gonna get to that around that area if there is a SNR level, which we have here, 79.20, right? So we're gonna hit that level, then bounce back somewhere here. We might have something, for some level for this one. Okay, it may be 82, 81 level here. You're going to go there and then come down all the way to 76.19 level. So this is the ping pong in between these. This is how you just have to keep, practicing. All right. The second question you had is like how I come up with the 50 brick size for DAX. It's just like I spend days and days and days trying different sizes and watching the wave and trying to avoid noise, a lot of false setups. And the best brick size I came up with for DAX, if we use 20%, 20 brick size, just like the other one, the regular size, you're going to have a lot of false setup in DAX. DAX move differently than the Forex. Okay, all the other indexes as well, right? Gold as well. So you have to have a different. So I spend a lot of time just testing this, 45 size, 35, 30, 50, 55, 60. Which one is the best? So I said, I came up with it, says, okay, For DAX, 50 is the best. And so far, so good. Okay. That's how I came up with nothing special. Just spending time and just, testing firsthand. Okay. So this is how you look for the targets. And these two charts, man, they are still, look for, be careful. Be careful because when the market opens up, you see this yen index chart. We already hit the target, the first target. I said 50, 54.73 would be the first target. Break that, we go to 52, this number. So we are at 54.73. So we may bounce and go and test one of the number above it, maybe 56.09 or something. So be careful. When the market opens up, let's watch it. Okay. And if we start dropping in there, then the next target would be one of these small numbers and then the big one. This is the one I gave you. Maybe we will go up to make a 40-minute setup and then start dropping. Okay. So doing that, yen pairs will be going up. So don't be just go and short blindly on Monday open, on Sunday open, Monday. Okay. Wait for the proper setup. But see, the weekly chart was this. You see that? So we got here, and then we may go up a little bit, maybe testing this number. I don't know why I don't have it written here. Whatever it is, right? So we may go up here and then coming down to one of these numbers, 53.91, 53.61, and then break that, and then drop to this outer channel TL and 52.52. Okay. Or maybe we will come down here and then bounce back to one of these areas and then drop, something like that. All right. So this is it. Any other question? If it's not clear, let me know. I'll try another way. All right. Okay. So bye for now and have a great weekend. Go out there, enjoy, do barbecue fishing. I'll be fishing all night tonight. So talk to you guys on Sunday evening at 4 o'clock. Bye for now and have a great weekend.